HDFC Bank, like you said, will stand out, since I think if there is anything to do with negativity, it will still be one of the best plays. Coforge, I would say large part of the damage is in. They are one of the fastest growing mid-cap ITs, which is now looking to improve their implant as far as AI and this acquisition. And I think the not having any promoter is a very big boon. I would say that somewhere down the line there will be a big buyout, and that could actually be very, very positive. The stock has underperformed, and I would expect it to outperform whatever the scenario. Idea Voda is a clear place that the AB group has got re-rated, and I think that you cannot but make money, because at 40% of EBITDA and 142 ARPU, there is only place to go up. Now, despite any government or change or not, data and telecom is going to be in a very sweet spot, and I think they have all the three, incomings now. Good leadership, leadership which is going to see that they are in the fray, and a very good opportunity for investors to make money, with, I think, the balance sheet getting much, much more stronger over the next maybe 1-2 years.
Ideas which I like, one is continue to like metal, so Hindalco is the new name, which has broken out of a 2-year cup and handle. Aluminium prices have bottomed out, started showing a rally. Very similarly, we were placed on, say, Vedanta when we were discussing, copper was at $4. Now, aluminium could be the next trade, so Hindalco is one. Second mid-cap idea is GE Shipping. That's a stock which has been in a strong uptrend. We are seeing a lot of volumes, bulk deals happen over the last few weeks. It's been sideways for the last 3-4 months. Decent enough numbers which have come up for the quarter. So the stock looks interesting, is more a neutral, market neutral stock, and not very well tracked or interest in. So that is second. Third is Delivery, which is a stock from the new age companies, which has gone through a 50% correction. Then we get through that 12 to 18 months of consolidation. Very similar to what happened at PB Fintech at 400 rupees or 50-70 when we were looking at Zomato. A very similar structure. The stock is absolutely listless for the last 3 months, almost at a 20-pointer range. So at 400, 450, this looks interesting as a turnaround story in the new age companies. And all these three names are irrespective of the elections.
Like L&T, I think that stock has been an underperformer in the last 2-3 months, and there could be a very strong catch-up which could be at play for L&T. The risk reward is quite attractive, and the stock is still continuing to be exhibiting patterns of higher tops and higher bottoms. So I think that context, the trend is still very much intact for L&T. So 3800 could be a target for L&T, and stop loss at 3200. BHEL is the other stock, and I think that stock has gone through almost like a V-shaped recovery from 65, 66. I think just 2-3 years back, the stock is now almost on the verge of breaking 300 mark. So that's another stock which is looking attractive. 330 could be a target, and stop loss is 270. And the third name which is very interesting, and that's sprung up over the last 1-2 months, is Amara Battery and Mobility. That's a chart which has come back into a multi-year breakout above 1050, 60 odd levels. So that looks attractive for a potential target of 1200 and stop us at 1080.
L&T, yeah, because I think L&T is underperformed because of result delivery, and people saw that they have guided a bit less. Contribution of these IT companies to the sum of parts is 200-300 rupees. So 550 rupees up or down it happens depending on what their outlook is. So longer term, I think it has good visibility both domestically and overseas. Once that ethanol thing happened, so at that time I said we need to avoid this sector for now and buy them near the time when the elections are getting over. So I think the stocks consolidated a lot. It's got a very strong business model in, I think once the new government comes up and assuming continuity, we'll again see a huge focus on ethanol. They are very strong on the CBG side also. So I think we've seen many of the capital goods stocks do very well in this period, last 7-8 months. Valuation and fundamental wise, it presents a contrarian opportunity.